Well, hello everyone. My name is Vitaly Palekhin. So I'm the president of international investor organization Investora, and I'm the board member of European Trade Association for Business Angels, seed funds, and other early stage market players. And also I'm the chairman of International Cooperation Committee of EBAN. So, and today we will talk about access to the funding during these difficult COVID-19 times. So we have a hard stop in 30 minutes. So I will give my presentation, and then I will answer the questions which you can type in the message sector. So let me share my screen. So what about accessing international funding and attracting investors during these difficult COVID times? So first of all, I think that we need to understand that we're living in some times which are not easy to make decisions. So, but in order to analyze the environment, I think that we need to go through some general things, something like, okay, what is the global impact for everything? So, I think that you know that there was a strong trend for deglobalization. So, and this COVID actually, I think that brought it to more like a protectionism. So it will lead to the growth of local players instead of global ones. And what it means for the investors, it means that actually it's not enough to invest just in some startup in Silicon Valley, for example, and hope that it will grow and become a global player and cover all the countries. Actually, this will not be possible anymore, because during the COVID times, you may see that actually something like China restricted mobile gaming, China restricted all the gaming, and any company, gaming company, which could, for example, call itself international, cannot do it anymore. Because, well, if they are not a local Chinese company, they cannot be in the Chinese market, because they are actually worried about some maybe messaging between the gamers and so on, protecting the country. So you may have heard about India, which actually restricted some application, like 53 applications from China. And actually it was a signal that the country is so big, should have its local players with the same kind of applications. And actually a huge amount of investments in India were loaded recently. And actually now, in order to cover the world, the investor need to invest in local companies, which will be local players, local giants, and local unicorns. So, and this actually will be interesting because this will accelerate cross-border investments. So there were cross-border investments always, right? So, and even angel investing and other early stage investors was not a local game. It's, well, the history of some business angels, so angel investors who actually invest only 1 kilometer away from its home, actually is not valid anymore. Everybody invests everywhere, and COVID-19 actually will accelerate these trends, and we will see it very soon. More things happening because of this. That's why this is a good news for the local startups, which, for example, lack local funding from the local investors, because more global international investors will come to some local places. But of course they are looking for the partners, because partnership and the co-investment is the main thing. So working from home, learning online will become more acceptable in general, and actually it also gives some trends. And actually, more investors are looking to the startups, to the companies which actually are solving such problems. Many companies were not ready for this, so many organizations, private organizations, government organizations were not ready for this, and actually the market is catching up. So this is a good opportunity, and I think that the main idea for the startup to be funded is to fit the current criteria, to fit the current situation. So some of the startups actually did it not intentionally. It just was the idea from the very beginning, and some of the startups, they are quickly adapting because they understand that they need to actually fit the current situation, current environment, and the current demand of the investors, and we will talk about it. So one important thing, that the habit not to spend much money will persist, and of course it is both about organizations and end users, because actually this is already and will be even more the main reason for high demand for innovations, for the increase of efficiency and so on. And this is also the way of thinking of the investors, which are looking for some new responses to the high demand for new efficiency, new innovations, and so on. So, and of course, everybody understands that the consumer behavior patterns, which are already different from what it was before the COVID, something like more people use online things, more people are using things, for example, it's not offline conference, right? It's online conference. Of course, when COVID is over, there will be more offline conference and so on, but actually, there will be online conferences as well. So this is the main idea, that people who, for example, tried online grocery for the first time, just because they didn't want to go to the offline shop, didn't want to get some risks of getting the virus. Actually, they understand the convenience of doing things online and delivery, and of course there will be offline shopping. But when they need just a function, I need some food to be delivered, they will use it because they already understood during the COVID times that it's more convenient. So, and these patterns changed and will last after everything is over. So what about venture capitalists? So, and all the early stage investors, so just the investors who actually invest in startups. So most of them are considering that these times are something like Darwinian or positive selection. It says strong startup teams will survive anyway, but the strongest will thrive. And this is what we see now. And because of this, actually, the investment focus of most of the investors are for those startups who actually not just well survived the difficult times, but for those which thrived because of this. So, and this gives them the opportunity to invest in some startups that are actually pandemic proof. So actually, of course, everybody is changing the investment focus on the sectors which are benefiting now. And of course, everybody, well, not just hopes, but understands that they will not stop growing just because of this changed consumer behavior patterns will last. So, and of course, most of them are not just investing in the thriving startups. And by the way, the idea that the startups thrived, it doesn't mean that the valuation increased a lot or increased much. Actually, this is a good thing for the startups. Sometimes they don't really need cash to go further and to grow further, but they get the investment because they understand that the investment is the fuel for the growth. So it means that, okay, they can do in 1 month what they can achieve in normal times, like in 1 year. And this is very interesting. And this is like a win-win for both sides, for startups and for the investors. But of course, investors are trying to search for the new opportunities. It's something like some strange ideas which maybe sounded very stupid before, right? But now, because the world changed, actually, this is something about the future. So when they are looking for the future unicorns, they are looking for something which will change the markets, the industries, the world. And of course, so those who are just adapting and not thriving, or maybe not something new for the world, of course, investors try to adjust the valuations. And this is the bad situation mostly for those who actually lack cash and in the situation that they actually are out of cash and maybe have for 1 or 3 months cash left in order to run the company. And this is maybe the most difficult situation, and we also discuss it. So when we go to all these crisis times in the world, something like economic downturn or pandemic times and so on, from the very beginning when the pandemic times happened, everybody thought that, well, this is something like a new thing and it will be worse than the Great Recession, which was in 2007, 2009. And the Great Recession in 2007, 2009 was the worst recession since the Great Depression, right? And when everybody analyzed the situation between 2007 and 2009, they understood that actually venture capital investments decreased about 27.7%. But this is actually in number of deals. But the number of angel deals and seed deals, for example, with the seed fund, kept growing during Great Recession. And from 457 in 2006, for example, it grew 3 times, according to PitchBook. So, and actually we can see that if any early stage startup, which is well capitalized for the next 2 years, and which is in the sector which is not disproportionately impacted by COVID, will survive anyway. Yeah, but it would be better if these startups cut unnecessary expenses and getting rid of new experiments. Actually, most of the startups either died or did this procedure and survived. So, and this is just the graph of how it was before. This is by deals, by stage. And we can see that when it comes to the amounts in 2009, which were down, it was not just by 27%, which was only by deals, yeah, but by amounts of money invested, it was something like 40% on round A, right? So, and B and C about the same. Yeah, so, and actually, after the Great Recession, funding grew again. And we can see that the only thing which actually was really interesting, that was that the biggest venture capital firms, the 50 global firms, actually, they haven't dropped too much. at that time. And why the reason was very interesting, because most of the venture capital firms decreased the amounts of investments actually because they lacked the LPs. So you know, most of the LPs of the big venture capital funds are institutional investors who actually have, when the markets, like stock markets, are going down, they have disproportion in their portfolios. Something like if they want that venture capital should be only 10%. So when their other assets are going down and they can see it and calculate it in the real time, because the stock market is, can be calculated in real time. So the proportion of venture capital, which cannot be calculated in real time, right? It's only by the next rounds, actually occupies more than, for example, their asset allocation strategy and so on. So that's why they sometimes cannot make new calls to the venture capital funds. They cannot participate in the newly created venture capital funds. And it was the problem during the 2007, 2009. And everybody expected that actually it would be the same this time. So, and when we analyzed it, we understood that probably it will be the same. The number of angel investing deals will increase, the number of venture capital deal will decrease, but the biggest decrease will be in the amounts of money which investors invest in startups. But in reality, it didn't happen, and it happened otherwise. So, and we will discuss what is the situation now. So about this Great Recession time, something like 2007, 2009, you may know that the greatest accelerators were created, something like Y Combinator, Xstart, Jumpstart, and after this, it was 500 startups and others. And actually, this was the situation, like the response to the new efficiency, to the new innovations, and some new players in the venture capital ecosystem were created, like accelerators. Yeah. So, and they were thriving in this time. That's why still many people expect that during these times there will be some new instruments of early stage startups support, which will appear as a response for the demand, increasing demand. So actually there are some ideas how it will be, but actually we haven't seen yet anything specifically, right? But we are looking in, but we see some movements in the early stage industry, but we cannot say yet that actually the COVID times brought some new, really new instruments of startup support at the early stages to the world, right? But we're still waiting because we see that maybe it will happen. Yeah, so, and I think that the most interesting thing, and every investor, either business angels, seed funds, venture capitals, private equity, everybody is talking about one thing, that during last financial crisis in 2011, 2009, actually great unicorns were born and got their first funding, like Airbnb, Cloudflare, GitHub, Pinterest, Slack, Square, Stripe, Uber, Beats, Yammer, and WhatsApp. And actually, of course, everybody understood that those who stopped investing at the time period, they missed out the best companies of the last decade, right? So, and everybody was thinking that, well, the downturn will not be long, and the technology revolution will only thrive, valuation maybe decline. But actually, what we see now that when this is pretty evident, everybody starts to look for the unicorns, everybody starts invest, and the situation we see now is a little bit different, which we saw in the Great Recession time, and actually we'll discuss how it happens. So, what startups are thriving now, and what sectors? I think that this is pretty interesting, but so everybody knows it. Something like online entertainment, everything about online, right? So and delivery, right, and digital health, and collaboration tools, and enterprise software, and automation, and so on. And actually, so this is the companies which gets the biggest rounds and the biggest support from the investors. But the most interesting thing happens in the sectors that suffer now, because this is a big opportunity to disrupt. Actually, these sectors which are suffering now, these are the main sectors, and this is the focus for the early stage investors, because actually in these sectors new innovation will come, and actually the new unicorns will happen. So this is events, transportation, hotels, sports, restaurants, bars, construction, fitness facility, tourism, any business that involves physical stores and so on. Yeah, so, and actually we can, events, right? So, well, everybody was benefiting from the offline events when it came to some offline and physical activity, and all this expo centers, booths, and so on, which are suffering now. But such platform like Hopin, right, on which we are now, actually is benefiting, right, because, well, they were at the right time and the right place. So actually, this is the situation which helps them to grow, and actually their growth will continue even after the COVID is over, because anyway there will be offline events, but so online conference will continue to happen. So, and when we take each of these sectors, we understand that each of these sectors, there are companies which were maybe tied to some traditional type of doing business, and those who innovated, they are thriving and winning, and investors really wants to invest in them, because they understand that this is how they can catch the future unicorn, right? So, well, this is just a situation. Well, all the startups are more or less okay, but if the startups are in desperate need of money and in desperate need of raising capital, but they are not thriving because of all these difficult times, actually it's not a good thing, and you need to do something like, and we'll discuss what you can do. So, of course, well, those who had a really overpriced round, but this really happened in 2019. Actually, they also are not really okay because of possible down rounds and so on. So this is what startups which are not benefiting from this situation should do, like focus on the main product, right? What does it mean? So most of the startups, they are trying to experiment, launching new products, so that not to be just a mono product, right? So to have other things and so on. But during these times, they focus on the main product, to be a mono product, not to waste money on some experience and so on, actually is a really good thing. If you have the main product, if you have a successful product, if you have the product which actually loved by the customers and so on. Of course, cut the cost, focus on profitability, improve unit economics despite the growth. Some companies, I mean not some, but many companies, they just stop marketing budgets and so on in order to survive before they can get a new round, in order to start losing money for marketing again. So, and so I think that this is very interesting, but there are many cases when the company, for example, say that, okay, I just take, for example, this amount of money, I don't want to take more. This is a possible situation before COVID, but now when nobody knows what to expect next time, right? Will there be a new wave or not? So I think that taking money even if the startup is oversubscribed, despite the dilution, is a good idea, because looking for the money, looking for the fundraising can take something from 6 months to 1 year, and it will give you a healthy reserve for this thing. Yeah, this is like a typical Sequoia matrix for COVID-19, right? So how to do some scenarios and how to, because circumstances are changing rapidly, you need to understand actually what are the scenarios, possible scenarios for your startup, and actually what can be done, and be ready for the worst case scenarios, right? Well, and some COVID thoughts for startups. Well, people will not buy things that nice to have. This is pretty clear, because people sometimes will not be able to spend enough money to must have. I think that this new wave will cut the budgets of many people. Yeah, so, and focus on the painkillers, not vitamins. So, and of course, this is, and you think that additionally to typical recession-proof startup, something like, okay, this is from the real sector, but just for better understanding, like low-price restaurant, right? People always eat, but when the market is not so good, when there is a recession, okay, people are cutting the budgets and spend less. So low-price restaurant is a typical recession-proof company, right? But when it comes to the pandemic-proof company, well, it is that, okay, it's low-price restaurant, but there is food delivery, right? So, and I mean, the thinking in this way will help, because actually, as I already mentioned, the behavior patterns, they will persist even after everything is over. And that's why now all investors are looking at the companies not in the way something like, okay, maybe it doesn't fit current situation, but when everything is over, it will be okay. Now, so when everything will be over, all the investors will look at other startups, but now they are looking at those which actually fit the environment, fit the situation. And actually, it is very difficult to maybe even consider investing in other startups if there are so many great opportunities when it comes to the companies which are thriving because of COVID, which actually maybe lower the valuations because of the COVID, or which actually are implementing some great ideas which maybe sounded ridiculous before the COVID times, but now they fit the market, fit the environment, fit the world. So, and what we have now, yeah, this is very important. In the despite all these recession times forecasts, and that actually it will happen maybe during the COVID times, we can see that in Q3 2020, there is a record growth of US venture capital market worldwide. 37 billion USD invested. It's a 30% growth to Q2, the second quarter of 2020, and 22% growth to the third quarter in 2019. Actually, this is like the best performing quarter in US venture capital history. So maybe the biggest time was in Q4 2018, about 40 billions, but all the rest quarters historically were less, right? So this is very interesting. It's not just a decrease in amount like it was 40% that time, but we can see it's not possible to understand now what time, but I mean that what percent, they would definitely increase in venture capital market during these times, but this quarter was a record, right? But when it comes to the number of deals, this is still 11% less deals. But what does it mean? That the best performing startups get more money. So, and we can see that in US venture capital market, there are 88 startups that got more than 100 million rounds, right? This is pretty amazing. So it means that investors see the opportunity, they understand what what were the opportunities which everyone lost and missed during the recession time, and they don't want to waste a good crisis anymore, right? So, and what is in other countries? Well, globally, Q3, the third quarter of 2020, showed the historical record of any times. It's 40% growth to Q2, and in Asia it was 74% growth. In Europe it was 29% growth, which is pretty interesting. You can see on this graph, according to the CB Insights monetary report of the third quarter 2020, as you can see here, the historical record, and this is pretty amazing, right? So what we see now, and this tells that well, when everybody analyzes the history, everybody analyzes the missed opportunities of previous times, everybody starts to behave in a different way, and it actually brings a different story to the market. Yeah, so actually this is my contacts if you want to contact me regarding some possible partnership in co-investment in different countries, or for example, if you have a great startup which are looking for funding. So now I am open to the questions. Yeah, and we have a hard stop now, but I can still answer the questions. How we can acquire the email address of, okay, this is not my email address. Yeah, if anyone has a question, maybe you can write it. Yes, so if you want to get a copy of the presentation, you can write to me with the request for this presentation. I will send you, or maybe the organizers will distribute it. Yeah. Can you please specify what is HW startups? Well, the question is, are HW startups considered less attractive during pandemic? Yeah, please specify. Hardware companies. Yeah, actually, it depends on what hardware companies, because, for example, all the automatization, it's not about digital, it's not only about online, it's about automatization, right? So some robotics and other things, because everyone understands that now all the automatic things, it's not only about efficiency and, for example, long-term payback period of time, right? Before, when everyone did some digital transformation in the company, in the corporation, and so on, they were thinking about being modern, being able to be more efficient, maybe in 5 or 10 years of payback period of time. Now everyone understands that automatization is just a matter of survival already, right? Because when you cannot, for example, let people work in the company because of the lockdown and so on, the more you automate it, the more you're efficient, and this is just the question of the survival. And that's why now many companies are focusing on the hardware startups, which actually help automatization. Yeah, the corporations are focusing on the enterprise software, which help them to do some work, something like the collaboration tools, something like the distributed teams work, and so on. And of course, all the corporation are thinking about hardware, which helps them maybe to replace people, to be more efficient, and many other things. So that's why no, it's not a like they become less attractive. It depends on the same way like digital startups. Does this hardware startup fit the current environment and meets the current demands? So, okay. Okay. There is a question. I have a startup project that is in operation for 2 years now, and I'm still in need of partnership or need support, but get more financial support and funding for my project. Yes, so I mean that actually it's not about, I mean that most of the investors, they are open. As I mentioned in my presentation, that actually it's not something like investors invest only in this country or in that country, right? Most of the investors invest internationally. They do cross-border investment, which is a very important thing. Second thing, that more and more investors will invest internationally and do cross-border investment. So because it's the situation when the companies will not be global from day one and cover all the countries and so on. In most cases, it will be that each country has its own company. Each country will have its own solution for some typical problems and situation, and that's why, in order to cover some sector, in order to cover some solution, the investors need to invest in local countries in many startups, which is a good story. So, and I think that what I'm trying to say, that most of the investors who invest, they invest internationally, and they are pretty much open. It doesn't mean that you cannot get the funding just because so it's not possible, and or you don't know those who invest internationally and so on. In that you got my contact, you can send me the presentation. There are many organizations which invest internationally and consider international startups, but the main idea, if the startups fits the current situation, if the startup fits some local peculiarities and so on. So after this, everything depends on the what are the idea of the startups, what are the traction of the startups. If you have the startup in operation for 2 years now, you should have something which could be interesting, and we can give the feedback. You have my email, you can actually send me and I will reply to you. So next question is, so food producers have a better chance for acquiring financing, and which door should we knock on? So it depends on the situation. So for example, now there are many investors who are focusing on many types of food delivery, for example. Food producers, I don't know, so it depends on what exactly you are doing, right? So when it comes to the food tech, and we're talking about some technology startups, right? So not the real sector. So if we are talking about some technology startups, well, food tech is really growing sector now, and there are more and more companies appear there which actually solve some specific problems. And there are giants which before were, for example, startups which actually acquiring these companies because they understand that food tech is a wide category, and there are many solutions that can be done there. This is really interesting. So so robotics sector is still lucrative for investors. Great, thank you very much for information. Yes, this is really so. can we easily reach international investors when we're in the seed stage and experiencing a time of crisis and uncertainty? If yes, how? So I think that first of all, it depends on what do we mean by seed stage. If by seed stage you mean, and sometimes entrepreneurs mean it like we have an idea, that's why we need seed money to seed them and to grow something. No, seed stage is a little bit different. So if there is an idea, this is a pre-seed stage. The seed stage in venture capital, it means that you have a product, you have some small tractions, for example, some users or customers. You may not have revenue and be on seed stage, but seed stage, it's never a stage when you don't have a product and users, right? So, and then if you have startups on the seed stage and have a product and some users, in this case, investors, they just investigate the user's behavior. So do they like the product? Do they actually come back? What is the retention of these users? What is the engagement level of these users? And actually, so it depends, yeah. But when it comes to the ideas, actually, it's never possible to attract investment on the stage of the idea from some international investors. So in most of the cases, when it comes to the idea, this is typically 3F stage. Maybe some business incubators, business accelerators can invest on this stage. But when it comes even to business angels, most of the business angels, they want to see maybe some product or some traction. Yeah, so, and yeah, so what are the investment opportunities available for solar energy-based solutions products? Yeah, actually, when it comes to the any hardware startups, though we said that actually it's still interesting during the COVID times, I think that if you compare, for example, digital startups and hardware startups, of course, it's maybe 10 times more difficult to attract investments in the hardware startup. Yeah, so there are less angel investors, business angels who invest in hardware startups. There are less seed funds who invest in hardware startups. And of course, there are less venture capital funds which invest in hardware startups. So I think that maybe 10 times less. So, and that's why it's 10 times more difficult to attract investments in any hardware startups. So I will write down my email here if you haven't seen it in the presentation. Yeah, and you can send me information. Yeah, you've got it. So what I want to say that if you send me something like information, I would appreciate if you send more detailed information about. First of all, please refer to this Euromed Scale Up Innovation Day session, so that I understand that you come from this place. So this is one thing. Second thing, please explain what are you talking about. I mean that so that it will be not just a general question, but some specific. I don't want you to send me like 100 pages presentation or some detailed description, but the main idea and the main thing which I want to understand. So please refer from the beginning. If you have just an idea, if you have, for example, a prototype, if you have a product, if you have a users, or maybe if you have already some revenue. This is very important. Yeah. So Thank you everyone for listening. It was my pleasure, and so please send me some specific questions to the email. Yeah. Thank you everyone, and have a nice sessions.